Hi, everybody, and good morning, good afternoon, and good evening, I guess, depending on where you are in the world. And it's a pleasure to have everybody here today with us as part of the Arab Household Saving Conference of 2021. Just maybe to kickstart, I would like to maybe initially first introduce myself. My name is Yasmeen Saffar, and I am a manager in the financial services sector within the Bahrain Economic Development Board. And today I have the pleasure of moderating this excellent panel and session on will fintech change the way people save, and will people make the shift to fintech? And before I delve into probably inviting my fellow panelists to introduce themselves as well. I think throughout the whole sessions yesterday and today, we've been hearing a lot of very interesting insights from multiple industry leaders and sector specialists in terms of the savings, the Arab household savings schemes, what are things are happening. And the previous session alluded very nicely into terms of what is the topic that we want to discuss today in terms of digitization of the savings schemes and how things are going. Obviously, there's a huge wave of fintech apps coming about. There's shifting attitudes around people managing their money, how clients are appreciating and being able to keep tabs on how they're managing their finances. And our panel today are an excellent group of people that can give us more insights into this. So I'd like to welcome our panelist, Alexander Brouwer, who is part of Viva? Yeah. Who is part of Viv Wealth Management. And then our second panelist is also Mehdi Fichtali, who is part of FinMaze. We also have Gabriel Goh, who's head of the research and development within FNZ in the digital wealth space. And last but not least, we have our own PK, which how he prefers to be called, Prashant, and do excuse me on your last name. Who's the executive director of Talabot Gateway, which is one of the open banking companies out of Bahrain. What I would like to do is maybe invite them in the order that I've mentioned to give quick introductions about themselves before we move into sort of the panel discussion. Alexander, you want to start?
Yeah, absolutely. Thank you very much, Yasmeen. So a small introduction for myself. I'm the founder of Vive.com. We are a robo-advisor in Europe, based in Amsterdam. We are launching probably in 1 month from now. There's a lot of similarities what we're doing with robo-advisories in Bahrain in the Middle East. So that's why we have connections with each other. Our area of expertise is that we're very good with risk, so we can make very bespoke plans, which based on balance sheet or asset liability management, which enables customers to really plan and invest for themselves. So really give this control and empowerment back to the users for them to manage the future themselves. That's our goal, and we're working very hard on that. So pretty awesome. Yasmeen.
Thank you, Alexander. Mehdi, want to go next?
Yeah, sure. So I'm Mehdi Fichtali. I'm the CEO and founder of FinMaze. FinMaze is an AI asset management firm. We like to call ourselves a robo asset manager. We are based and regulated in Abu Dhabi. We launched end of last year, and the public launch was the past 2 months. We managed to raise a 7-figure digit of dollars in AUM, which basically put us on the landscape as one of the asset managers that is particularly leveraging on the AI and algorithms to give the best and the most personalized type of investment to our clients.
Thanks, Mehdi. Gabriel?
Hi, I'm Gabriel Goh, head of R&D at FNZ. At FNZ, we partner with financial institutions to enable them to provide multi-channel retirement and wealth management services to their customers across retail, direct, and advisory channels. To support our customers, we provide a set of core outsourced services that span the entire wealth management value chain, from the digital user experience, client, account, and portfolio management, through to back office trade execution, settlement, and investment administration. FNZ believes that enhancing client engagement, lowering costs, and delivering a simple service through personalized solutions through technology is key to helping people achieve their financial goals, which is also our company's motto.
Yeah, thanks, Yasmeen. I'm PK, as you said. I'm the executive director at Tarabat Gateway. At TG, my role is driving the commercial strategy and operations in the region. I also work very closely with some of the regulatory bodies and the industrial body here, like in terms of Bahrain Open Banking Framework Committee, as well as MENA FinTech Forum, to drive the open banking agenda in the region. I think I'm very excited to be part of this panel because it relates very well with the purpose for which Tarabat Gateway was established. So 3.5 years back, when Tarabat Gateway was established, we were trying to solve basically two fundamental problems. One, to create a robust and secure infrastructure in the MENA region, to build an ecosystem of banks, fintech, and various financial institutions, so that provide them a single universal API. So as a B2B company, we can empower these banks or fintech to offer differentiated and personalized financial offering to their customer. And the second part of it was, how can we democratize the financial world by opening up the value of the data using the open banking API, so that these fintech or these banks can offer the personalized solution to their end customers and bring in and enhance the financial literacy in the region.
Great. Thank you, PK, and thank you everybody for the quick round of intros and sort of sharing some insights about the work that you do. I know throughout this past couple of years, or if not the past decade, there's been a lot of conversations around digitization, pushing for technology. In my own experience as the subject matter expert within the financial services at the EDB in terms of fintech, for us it's always been the question is, how does technology translate into the traditional, let's say, product offerings that we currently see across the board in terms of financial. And I think in today's forum today, we want to address how are these things interlinked? And, it's best to hear from, the experts in the market and how you also see it from your perspective. So maybe as a first sort of maybe to open the discussion, maybe Alexander, if you can give us some sort of insights. So if you think about it, fintech has emerged as an innovation solution to legacy and chronic issues and challenges that we're seeing. To what extent do you believe that fintech today is solving the household savings problems? From your own kind of experience, and if you can elaborate a little bit on that.
Yeah, so what you see is it's still a bit fragmented, because household saving is not just one thing. It's not just one. It's loans, maybe trading, maybe your bank account, and you see a lot of fintech solution popping up and really focusing on one thing and doing that really well. But to have that overarching concept which really helps you in your household, I think that's still emerging. So it needs a couple of years more to really develop. But if you look at that, what the incumbents offer against it. So what do they offer? If you look at, for in the Netherlands, ING, ABN AMRO, or Rabobank, then they can't further innovate. It's very hard for them to bring to the next level, while these young startups really are going much faster. And especially from Europe. So I know Europe much more. And also, if you compare it to the US, the amount of money from investors pouring into all these initiatives. So in the US, it's massive. That's $1 billion market. But also in the Netherlands, with Adyen, very famously here, a lot of money is coming into it. And so in the next couple of years, there's going to be a very big boom in all these fintech solutions becoming coming to not what's a wisdom, but becoming more mature. And you see the big banks just lacking on that. So there's a lot of potential out there.
Well, that's good to know. And what do you think, Mehdi, on the same kind of note in terms of the question, in terms of innovative solutions to our legacy issues?
My answer will be in three. First, access. Second, cost. Third, dedication and personalization. Access, fintech are today available from the mobile, are available from a laptop of any household, which is a different paradigm than what you had before, whereby you need to go and physically visit the different branches of the banks or the asset managers or the private banking, etc., etc. So here, out of your desk, and it is even more easier now that a lot of people work from home remotely, or at least some of the time, you can easily and check which fintech you want to back with, we want to put your investment and savings to work on, and also keep on checking thanks to real-time dashboards and real-time market to market, know where you are at and what you need to do. So first one is access. Second is cost. What I mean by that is that today, if you look at the wealth management business, and if you look at what the best in class offer, the best incumbent in class offer, I think it is simply great. People who have got millions of dollars to be managed, if they go to a Swiss bank or if they go to an American bank or even to a local bank, with that kind of money, they will have very good investment professionals who will be looking, analyzing their wealth, and we're going to give them the right advices, and we'll be able even to build portfolios for them. But if you are not in the type of household who is saving millions of dollars, then you fall short on either you have some money, and in this case, you are in a premier category or priority bank, whatever your bank calls it. And in this case, you have a product push. The product of the week is to get leverage bonds. The product of the week is to buy this fund for which you know that the bank or that they are not actually giving you an advice. They want to sell you a product. And if you are lower than that, well, basically you have nothing. So basically there is no real strategy for savings. So what fintech allow is to bring this kind of private banking service, this kind of, I would say, a very secluded, very dedicated private banking to the masses, and they do it at a fraction of the cost of the private banks and the wealth managers. Last is the kind of dedication that you could expect, thanks to algorithms and thanks to AI. For what, as far as we're concerned, what we do is we build portfolios in the following way. We leave the human beings do what they are best at, which is strategic allocations, which is putting in an investment or in a wealth analysis, the minimum weight per security or per asset class. And then we let the heavy lifting of the calculations, of the calculation of the volatility, of the correlation, of the performance of portfolio, etc., be done by the machine. So today, thanks to the AI, thanks to the algorithms that the fintechs have, what we can do is one human being puts on the strategic level decisions, and then he lets the algorithm do it in a personalized manner, in a dedicated manner for each of a client at a fraction of the time that you would spend in a normal way. So for example, if a private banker can also dedicate time to manage 50 customers, thanks to fintech, one human being can manage perhaps 500 or even 5,000, depending how it is set. So access, cost, and dedication.
Okay, well, that's a nice way to sum it up. I mean, in terms of like how fintech has kind of emerge to, put, solutions to the problems, especially around sort of algorithms, AI, and number crunching is, kind of the back end of things. But yes, I mean, definitely it is able to solve some of the problems. Maybe Gabriel, from your perspective as also, an asset manager as well, and being specifically within the R&D space, would you agree to some of these insights, or if you want to elaborate a little bit more as well from your perspective?
Thanks, Yasmeen. So absolutely, Mehdi has made a number of good points. I think the key of which is that technology can now be used to level the playing field for everyone. So whereas private banking services in the past was only available based on how much you could invest with, which cut off a lot of population, a lot of society, you're now being able to engineer that, for example, within software, distributed through the internet, and basically allow that sort of service to be available to anyone at the tips of your fingers. And that's something that I think is really remarkable, and how and where we are today versus where we were 10 or 20 years ago. I would actually go further to say that while humans are still currently use or decide on aspects on things like strategic or capital allocation, hopefully in the not too distant future, we can also look to automate, or at least reduce the emotion out of that as well, and hopefully build some sort of future where consideration or concern for the individual and how they go about planning for their retirement or planning their investment savings of their households, their families, can be taken out of the equation for them to not worry so much about. And I think that's something that that we could probably see within our lifetimes. And I know that a lot of the products that the other panelists have within their respective companies or firms are already on track to help enable and automate all that. So the impact on society, I think, is tremendous, and once again, leveraging off technology, which we're all very lucky to be alive in this time to experience.
Well, thanks, Gabriel, for that. And and I think Alex again mentioned, it's a global thing, right? That every jurisdiction or every country has its own way of doing things. So it's always good to sort of see if there's any patterns or uniform ways of doing things, and technology can definitely help us arrive at some of these conclusions. PK, would you like to take a stab at that? I know obviously this is sort of maybe slightly from what you typically would focus on, but it would be interesting to also hear your insights.
No, I think I agree with the view, and I would want to add one aspect to it. I think specifically from the region perspective, I think saving is also about the culture, right? Every country, every continent has its own way of the cultural nuances of focus towards the savings, right? And in the region where we are seeing the technology really enabling that with the newer technology is people in the region normally have more than one account, one bank account which they are born with because their parents open that account, one another account which probably, when they get the job, they open the salary account, and the third one is maybe credit card. Now, because we are very high in the region, we are very high on the spending habits. And while everyone uses the mobile phone for maybe buying from Amazon or buying from, Talabat or, ordering flowers or chocolates on the app, the saving culture is not there, primarily because the financial literacy in terms of, for me to know at the end of the month how much I'm spending on a coffee vis-a-vis how much I'm spending on my education or other aspects of my life is not available. And I think the new technology is bringing that back to the people, right? So if the fintechs are able to leverage that information, give back the data in a very structured, categorized manner back to the consumer to help them understand their spending and savings behavior, I think it sets the platform for people to build that saving culture and say, okay, fine, I can do better with my saving goals. I can do better investment rather than waiting for a raffle draw to come and give me $1 million output, right? So yeah, that's what I would like to add.
Well, thank you, PK, for that. And I think this kind of is a really nice segue into one of the questions I do have that I wanted to pose to you actually as well. Is obviously in light of all the different things, and technology is quite a broad spectrum. Financial services is another broad spectrum. But as Private Gateway or TG, and you are part of the whole open banking space and ensuring that infrastructure is available. So I would call like the back end channels of data is through you. Would you say open banking is boosting the capability of individuals to manage their accounts realistically? Also for institutions to share their account information. Do you think this is well understood and well leveraged by the current financial services regionally, and maybe for your own experience internationally as well?
Sure. Yasmeen, I think that's a great question. So obviously, I would say that there are three hidden questions within that simple question, right? So there are three aspects to it. One is in terms of, does open banking facilitate what we are looking at in terms of customers getting a better view of their financials, getting their better hold on the savings or spending pattern, or getting a better product? Absolutely yes. Are we seeing the banks or financial institution adopting to it? The answer is still again yes. As you would know that in the region there are a few banks which took the lead, and traditionally what happens is when the banks have been looking at their IT strategy, they look at, okay, what is the new user experience I can bring into the mobile app? What is the new internet banking application I can launch, right? Whereas, which is thinking of, say a 20-year back or 30-year back when people were just happy with getting the information digital, right? The client behavior is changing, right? The more and more youngsters are banking now with the banks, and they want the information now. They want the information here, and they want consolidated information, right? So when I talked about me having multiple bank accounts, what open banking is enabling bank to offer a better experience is PK can go to one particular bank app, which is using an open banking, and can see all his bank account balances, right? More importantly, I can move money from one bank account to another bank account, being on a third bank's app, right? Which is what open banking facilitates. It is also not only disrupting on the information flow or information exchange part, it is also disrupting on the payments part of it. So if there is a housewife which want to sell a cupcake, the traditional payment method is, if I have to sign up with MasterCard, Visa card, there are a huge merchant fee which I need to pay, right? Whereas open banking makes a direct account-to-account payment possible, right? So it is democratizing literally, that even the small enterprises to launch new offerings to their customers. So that's the second aspect of it. The third thing is, Middle East as a region is a bit fragmented, right? It's not like a Europe where you come out with the regulations, you come out with the data structure, and you can spread the companies or the fintech applications across the region. In MENA region, still there are different laws in terms of where you can host the data, how you can offer different offerings, and I think that is a lot of work which regulators have to do along with the fintechs to drive that. But what we are seeing definitely as a trend, our banks are adopting to it. Customers are adopting these applications to give better services to their customer. What I still want to see, and probably which the digital banks in the region here especially need to probably pick on, is if I was starting a digital bank here in the region, I would have actually gone with the open banking as my customer acquisition strategy, right? Which I am still yet to see in the region. Whereas if you go to UK, you would find a lot of challenger bank, whether it is Revolut, whether it is Monzo. The open banking was an integral part of their strategy to acquire customer and offer better services, which is a gap right now in the region. But I'm sure one or other of the digital bank would pick this up as a strategy and give that services to their customers.
Thank you, PK, for that. And I think, just from my own personal experiences, Bahrain has taken a bit of strides into that space. And obviously, the birth of Tarabut Gateway is, in terms of alliance with the whole efforts that the country's put in place in terms of pushing for open banking regulation, looking to also work with other players that are in the infrastructure and, pushing the banks to digitize. I think what we would want to do also is try to understand how open banking also corresponds with wealth management and robo-advisory. How could that be interlinked? So obviously open banking, it's all about, kind of the consumer, right? What does the consumer need? How can we offer them better services? And saving is one of the elements that is uppermost in people's minds that have multiple bank accounts. I think you've mentioned you can have your salary bank account, you can have but definitely every single one of us is thinking of their saving accounts. Maybe a question that I would direct to the robo-advisors on this call is, from your own experience, and obviously, PK's kind of feedback on the general kind of open banking and the relationship with the banks. Are you seeing a kind of a collaborative approach between robo-advisors and the open banking space as well, from your perspectives? And I'll invite maybe Alexander, Mehdi, and Gabriel in that order. That's okay.
Yeah. So let me add to that. To that open. First, let me address that open banking concept. What you see is that the banks in general it was a big threshold to because the banks have all the clients, and for a small player to come to the market and to also to attack these banks, it was very hard. So and with was also the open banking regulations being imposed, it becomes from an information perspective, it becomes much easier for newcomers to actually attack a little bit the banks. And what you see is that just finally where the banks were very sitting still and doing nothing for years, they finally are moving, and they're like, I might lose customers now. This is becoming much more serious a problem. I need to address this problem, and I need to act on it. And then there is I heard Monzo, and there's number 26 obviously, and there are a couple of others, and then you also have Bunk. These are new banks, so there's very, very, how do you call it? It has not been done in years that new banks are introduced in the environment, and they can do that because they can't. So they're not able to give the full scale of banking service immediately, because to do that they have to build for years. But they can really quickly give a full suite of services using the open banking, and instead of building for 5-6 years on all their products, they build for 1 year, and they just bring all the good products in from other players, like wealth managers or trading apps or whatever you, and then can offer their clients like a full suite. So you see that happening with Monzo, with number 26, and I think that's very interesting. So from my perspective, how does it help me? Well, I talk to a lot of like insurance companies. So there are a lot of players who have like a certain like wealth management solution. They have 10,000, 20,000 customers. They're not small, but they're definitely not big. And actually, the amount of customers they try to service is not big enough to have a full operation in place. So what do you do if you're that kind of a player in the market? And this is very interesting, because they can say, okay, we stop all this complete service because we're not big enough. We're a local player. What do we do? Or you say, well, let's not do it ourselves. Let's invite another solution on our platform. We do a kind of like a revenue sharing model, whatever that is, and we can offer our customers this service on a profitable way, instead of like a losing money solution. So there's all this consolidation in the market, which also is happening with banks, where you need to be a really big player to have a lot of customers in a certain products to be profitable. So if you have a bank and you have like, or you're an insurance company and you have 16 or 15 offers, not all of them are profitable. So what do? And I think open banking, in that matter, for us as robo-advisors, there's an opportunity to say, okay, insurance company, you have 20,000 customers, please don't try to, and you don't have the IT, the research capacity to build it all yourself. Don't do that. Please use our robo-advisor, and we just plug it and play, and you can work from that. And then you don't have to abolish that product. You can still offer it, but you don't also have to allocate resources to maintain that service completely, and to pick up innovation on that service as well, because to be competitive. And I think that's a win-win situation. And I'm very interested to see how that will evolve in the next couple of years.
Well, thank you, Alex. Mehdi, you want to comment and follow up on that as well?
Yeah, sure. I share Alexander enthusiasm, albeit I think in the region this will take some time. I think that the bank in the Middle East are quite protective of their clients. I'm not sure, but perhaps PK can give us a better feel. I think also the regulation is still evolving on that front. I mean, not anybody can connect to the API of a bank. So it probably will take time. What I see happening in perhaps a shorter future is collaboration that will work on a white label basis. So basically, who will front the client will always be the bank. The client is the client of the bank, and maybe the bank will allow some of the fintechs, may them be robo-advisors, or may there be also some other services, right, to operate in the background, whilst the bank will use the system of the robo-advisor or the wealth tech on the background. That's one solution. The second one will be a co-branding, but here what we need to keep in mind is that co-branding makes probably sense when you have two people who are of equal strength, or at least in equal scale of strength. Fintechs today in the Middle East are quite infants. They are small seedlings, whereas some of the banks here, I've been here in the region for the past 50 years. I'm talking about international banks, or the local banks as well. They are sometimes they are state-owned, etc. So sure, probably if we have a similar evolution in Europe, we will end up having open banking, and here fintechs will be able to use the banks as a platform for them to expose their services. And yes, the banks will be able to offer different type of services to its own clients. But in reality, I think that the transition will not be that easy, and we'll probably have the banks using white label solutions coming from fintechs. And I think that Gabriel system is basically what it does, right? Gabriel, from my understanding, you have a service, a software that you offer to banks, and your brand name does not appear to the clients, no?
Absolutely, that's white labeling, and that's what we do best. And I think that the direction of open banking, or a lot of this the application layer that sits underneath what's perceivable to a lot of end investors, is going to be the rails of what drives the industry, and there's a lot of innovation there. But to your point as well, I guess, Mehdi, on open banking, it feels like there's different states of progress between different countries or different regions, but overall, open banking is a positive initiative and has a lot of potential as it matures. I think the key bit, or what's very, very important about open banking, is that it introduces this mechanism called the consent flow, and this consent flow essentially makes it easy for a customer to open and act and use new accounts between new providers, and this is especially beneficial not just for institutions, but also for customers. It gives them the ability to switch very easily and bypass a process that could often take many days or many weeks in physically moving cash, or transferring or providing the data on the application in a traditional way. It could take a lot of time, and there's a lot of obstacles, especially for a lot of people who are busy and working. It gives them an opportunity to access many different financial providers, pick what's best, but it's also an opportunity for institutions, as they can also then compete on a more even playing field for customers. So you get the view where not only does the customer have the choice, and it removes the friction for new services, but it also levels the ability for smaller banks who maybe traditionally, or smaller fintech players who traditionally had smaller budgets or less resource, who with a strong product and with conviction in what they're building or developing, they can compete on a scale with larger banks that they couldn't previously. So all in all, it's open banking I think it's a very positive initiative for the customer, for the marketplace, and as also for society.
Well, thank you, Gabriel, for that, and Mehdi as well, and Alex. I think definitely, open banking is the way, but I agree. There are varying degrees of development, and obviously collaboration is key. And obviously, sort of in the growth of the fintech ecosystem, collaboration is the key to kind of do things. Either, like you've mentioned, Alexander, like they might be too big to kind of be able to put the resources or the right teams in place, so it might be easier just to sort of partner up with another small, more nimble entity that could just kind of do the day-to-day. But I think there's an element of awareness around this as well. So be it at the individual level or also at the corporate level. So, sometimes you speak to entities and they're completely either unaware of open banking, or they're really not even kind of looking into terms of how to augment their saving schemes or how to kind of better offer better solutions. And even if they do realize that, they don't know how to go about doing it. They don't know who to speak to or who to partner up with. So I think definitely more conversations, more collaborative opportunities, and more engagement is key, which kind of leads me, and I think Gabriel alluded to this previously. It's like, there are the bigger players and then you have the smaller players. And I think the question here would be, is, these current digital propositions, when we compare them to the general offerings of the big institutions, would you say the current offerings are better or able to serve the consumer's needs better, quicker, or be a bit more attractive? Would you be able to share a bit of insights from that on that?
Thanks, Yasmeen. So a common trend that I've noticed with a lot of the smaller play offerings from much smaller players is that they go ahead and normally innovate or design their product in a sort of a more user-centric and personalized and tailored way, looking for problems or areas that they'd like to solve, in which most products and services distributed by much larger institutions might take a more general and less specific approach to. So I think that although a lot of larger firms might have scale, and that might mean things like the variety and the wideness of the offering, or the depth of all the savings in terms of cost, what you'll find is that there's a lot of innovation and a lot of startups and smaller providers that focus on providing sort of adjacent and incremental services. Things, for example, that have been discussed previously on this call, like saving goals and retirement planning that's personalized to an individual or a household. And that level of personalization that you might not necessarily get with larger institutions' offerings, but that might be more relevant and actually add more value to customers and to what they're looking for within their journey of saving and investing for retirement. So I do think that the space and is an area is wide enough where you can get various sorts of edges in differentiating the product. Using key bits of innovation that's easily accessible through technology and through software development, that really puts a lot of the smaller providers at an edge, which they might not have been previously before the rise of fintech.
Thank you. Mehdi, I guess in terms of that, and given that you also have some sort of as a robo-advisor and kind of have your own solutions, would you be able to also comment on that question in terms of the appetite around the digital propositions and how are they able to better serve consumers?
Well, the simple answer is yes. All of our clients actually are very happy about our service, and some of them are closing or winding down the portfolio and the savings they have with the international banks in order to bring them to our platform. And the reason is, as I said, the transparency. They know exactly what they are at. They know that as far as we're concerned, or actually as far as our model is made, we are remunerated in a way that can serve, that is really bring to the client a conflict-free type of solutions. We are not here in order to push in the products of the house. We don't have products of the house. So our products are the products of all the houses, and we have direct access to the markets. So basically, we are not tempted to push any product to our clients. And third element is, as Gabriel said, is that if we combine the use of the algorithms that we have today and how we show it to our clients, we are really in advance. What I would like to say is that's the case of technology. So London subway was built at the end of the 19th century. And 100 years later, it was really outdated. Whereas the subway, let's say the metro of Dubai, was built in the years 2000, 2010, and therefore it is excellent in terms of technology because it is using the latest one. So I would like to use the same comparison between the banks and the fintechs. Our systems were built on a technology that was born in 2019, 2020. Whereas the bank's technology was built on the early 2010. The cost of switching for a big bank from one software to another is huge. It takes millions of dollars and thousands of hours of manpower. We are small, we are able to adapt much faster. The image also that I often share is that the banks are like big ships. They are strong, very much stable, but very difficult to operate, as you have seen what happened recently on the Suez Canal. Fintechs are jet skis. We are fast, we are strong, we can go left, we can go right, we can follow our clients' desires, we can adapt to them in a manner that is much, much faster than what the big banks can do. So where I think we are at a strong advantage is on, I would say, when it comes to robo-asset management and robo-advisory, is in the bracket of people who have got around $50,000 to perhaps $250,000 of money to be managed. Here, these amounts are too small for the banks, the big banks, to bring in a dedicated service. They are looking basically at the $1 million plus, $1 million US dollars plus. Whereas us, we are able to provide a similar kind of service to the $100,000 and $200,000 bracket because we leverage on the algorithms, because we have a technology that is fast enough, and because ultimately our service is better, and we are equipped for that. Last, I would say is that, and this is the story of FineMaze, we were a bunch of senior bankers working at international banks in sovereign wealth fund in the region, and we've been equally frustrated by the service that our banks were providing us at a personal level. So what we have done, and this is exactly how it happened, I took on a piece of paper and note down all the things that basically does not make me comfortable with the way how my savings are managed within my own bank. And we thought very, very, very hard on how can we design a solution that will basically satisfy all these problems and give us a good answer. So what we have done is that we built FineMaze as a fintech that is by design made for a certain type of customers, for a certain type of request, for a certain type of savings. And we believe, and the traction that we're having on the market since our launch is a good demonstration of that.
So maybe just as a quick follow-up to that, Mehdi, so how would you say robo-advisors are nudging people to save? You know, how would robo-advisors and their capacity, kind of push people to actually use the services and, focus on savings?
Yeah, so as such, what we offer, so clients need first to come back to us to be convinced that they want to save. Now, there are a lot of noises in the market of all these brokers that allow people basically to invest in the stock markets with the zero commission plans. Basically, brokers who offer sometimes also high level of leverage, and basically the line between speculation or taking bets is blurred versus the line of making savings. So what we want to do, and this is what our clients praise us for, is that we allow them the same kind of access to the brokers, but we basically put it in portfolios which risk is calibrated to the need of each of our clients. So in a way, what we want to do, how we can encourage them to save, is by offering them solutions and offering them the way to see their wealth develop, but in a much controlled manner. Last, what I would like to add here is that there are different ways of savings. One way is to dedicate a monthly, to make some monthly wires from the bank in which you save your salary into your saving accounts or into your robo-advisor. And this is where PK solution can be very, very helpful. We cannot today, we don't have the technology today to basically make the client send us automatically this transfers, to send us automatically his monthly savings. With the open banking, we may. Today, we just count on him either doing it automatically on his own bank or doing it on a case-by-case basis. And what PK solution could be of interest to us is that we can help the clients from our own platform basically commit to these regular savings and help him keep on saving all the way out. PK, is this technically possible today?
Yeah, so I think Mehdi, my 2 cents on that would be, it's very interesting conversation, especially on the robo advisory perspective. And I was listening to it and was trying to see, what open banking brings to the table here, right? So I think first and foremost thing which I want to add is it's not between banks or the robo advisor or the fintechs. I think it's, as I said in the beginning, it's an ecosystem, right? Now, I personally believe that the customer out there look for the value, whether they're a customer of bank or they're a customer of a fintech, they look for the value, what the system can bring in, right? And in our experience, when we have created that ecosystem where the banks and fintech can collaborate using this open banking platform, which we are building at a regional level, we have seen even the large bank, whether it is in Bahrain, whether it is in UAE, if they have seen the value which a fintech brings for their customer proposition, they're more than happy to jump on it, right? What open banking does is basically it makes the field very level playing. So basically, if you're a large bank or you're a fintech startup, it gives you the same opportunity because by regulations, now the data is available. You can have the savings data, you can have the credit card data, you have an investment bank account data, you have the mortgage data, right? So as you rightly said, Mehdi, in the traditional old time, the customer has to give all these bank statements and give it to you physically, you key in into your application and then run those whatever AIs to tell them an advice, right? What open banking would facilitate with this secure access with the consent of the customer using a platform is customer can give consent to say that, okay, I want to use a fintech robo advisory of a bank, of a third party, and here are my bank accounts, here are my cards, here are my mortgage account, which product will work good for me. So basically creates an opportunity for both fintech as well as banks alike. Size doesn't matter. What would matter is what is the value you're bringing to the table as a solution, whether you're a bank or you're a fintech.
Alex or Gabriel, do you want to add on to that?
Yeah, I think PK hit the nail on the head. That's it. And I also see that banks are not sitting still. So actually, my wife works for one of the biggest banks in Europe. So I actually saw, because she's working in the innovation department. I actually saw that they wanted to work together with another party. Actually, was TransferWise. I can say it because nobody knows where my wife works. But anyway, everybody wanted it in the top of the bank, but in the end it didn't work because from all the people below there was this rising. Okay, but if if we don't do this concept anymore, what happens? So so it was killed within the bank. So the culture and the kind of people you have in your institution are very important to get to that next step. So banks are traditional, a lot of account managers, a lot of marketeers, all that people. And here all these fintechs come up. They're 80% technology driven. 50% of the companies is engineers, developers, and the other 50% are marketeers, help, whatever that is. So so they go with incredibly speed, and there you have these incumbent banks, which only have like 1/10 or 20% is like technology. So and they have all these all these clients that and they try to serve everybody, which is quite difficult, which we obviously don't have to do. But that is changing. So I wouldn't sit still if I were a fintech nowadays. I would actually speed it up, because banks are coming in, are changing, and what PK says, customers look for value. So if you have a value product and you can be trustworthy, because that's also variable, because you need that trust. And I actually know this because the good example is Betterment in the US. They did for their first $1 billion. It took them 3 years, of over 3 years, to get that first billion, and the last $1 billion that took them a couple of months. So once you, especially within the wealth management or in the robo advisory, once you get that traction, once people see that value, and once that value is like spread to other people, and your uncle is using it, and your brother is using it, or your sister is using it, then you get a certain momentum, and that can be very contagious. So and obviously that's a sweet spot where fintechs want to be in, and we have to work very hard to get to that point. But you see, especially in Europe with banks as number 26, they have already, I think they get a couple of million new customers every year. So that they're expanding massively. And you see all these local players in like ABN AMRO and in ING and Brouwer in the Netherlands. They stay in the Benelux. Well, these new banks like Revolut, they're European banks. And a good friend of mine, he has a son. He was like 18 years old, and he had to open a bank account. And he opened a bank account at Revolut. And dad asked us, "Why do you open a bank account there?" And I was like, "Yeah, why not? I live on the globe. I live on the world. So I just don't live in the Benelux. So just to see, especially younger generations, they see themselves different. So they're less brainwashed with all the commercials from all these big banks. So they see the value of the product of a Revolut, of a number 26, of a TransferWise or a robo-advisor for that matter, differently than people who are older, and they don't go to the bank immediately. So they immediately go to the fintech. So it's very interesting to see that the value counts.
No, thank you, Alexander, for that as well. I mean, I completely agree with you, and I think on one of the earlier sessions it was mentioned, I think especially in this part of the world, or within the GCC, we are kind of dependent a bit on, let's say, the pension in terms of our retirement schemes, and we're thinking about that. But the newer, younger generation are emerging and are focusing a bit more on what are the alternatives, or what are plan Bs, decide what it is, because obviously, if we're funding the retirement of the older generation, then who's going to fund our own retirement, especially if, let's say, we're becoming less, or, there are different dynamics kind of playing around. So I do, that's a very valid point, but you're right. People are looking for solutions that are international, that are quick, that are, available and kind of accessible. And I think that goes back again to what Mehdi was talking about earlier. Cost, accessibility is very key to this space. I know we're running almost out of time, and there are a couple of questions from the audience that I would probably want to just address, just to make sure that we've answered all questions. So there was one about how can features like real-time 24/7 access to my portfolio or device on the move be significant to savers and investors? And I'll leave the floor to any of you to pick that up if you'd like. Any thoughts on that in terms of is it quite significant having access to your saving schemes, or it doesn't really make much of a difference?
Well, I would answer differently. How bad is it if you cannot have a 24/7 access to it? I mean, in today's world, first, technically speaking, it is possible. Second, you may today want to consult your banking account at times that are outside of hours. So you have, if you want it, you need to have it. So why should you wait until the end of week or the end of month to get the official statement from your bank? This is I would say the past century. Today, if things can be done technologically, if real time is possible, then it has to. It's not even a matter of choice.
It's just the way it is.
Yeah, I think I second that, Mehdi, because obviously it's also dependent on what are you investing in, right? So where if you see if we talk about the cryptos or the bitcoins or of the world where the price fluctuation is literally hourly, or even an investment opportunity, where you have linked your bank account and you want to sweep it out the moment you have invested in which asset class and it makes sense to you. The technology today, whether it is open banking or other, AI technology permits it. So I would say yes, absolutely, it makes sense.
I'd probably take it further to what PK was mentioning and ask and say, do you, even if you could check it, if it is technically possible, sure, but would you want to check it every day, 24/7? As what PK mentioned, there might be a lot of volatility in your portfolio, a lot of changes, for example, to the value of your portfolio, and that might really, affect how some people might sleep at night. And so I think this is also where the role of robo advisors come into play, where you're trusting the robo in a sense to provide you with a sense of discipline and remove emotion from you making any emotionally based investment decisions.
Yes, you are right, Gabriel. If I may, it is not advisable for you to spend all your days in front of your screen watching if it is moving up by 1 or 2% or going down by 1 or 2%. But as a customer, you certainly want to have this option to do it at any time. But I would agree with Gabriel. The idea is not to, once you put some savings at work as an investment, the idea is not to only look at it and feel the roller coasters of emotions. And the contrary is to give an asset manager or a robot manager the opportunity to do it for you.
And I think that gives you the peace of mind and the trust. And obviously, if you trust the providers and there's analytics behind it, definitely that will lend itself in itself. I mean, if I need to invest in something and I can park that sum of money and forget about it, reassured that it will be taken forward by a trusted advisor, why not? I think that's what everybody would want to do, especially I think education, life savings, retirements, all of these saving schemes that we kind of look into life insurance as well. So
if I could add a little bit, think of that from the perspective of the customer. So I have an incredibly busy life. I'm doing all my stuff. I'm having children. I'm having stuff. I'm busy all day. I have a little bit precious time, and the precious time I have, and when I look at the app, I want it to be up to date. I want to see it immediately. I don't want to question it. It needs to be there. It needs to be up to date. And so as a fintech or as a product, you get a couple of seconds, you get 10 seconds, you get 1 minute tops, if you even get that. So in that 10 seconds that you get a customer's attention, you need to be relevant and need to have valuable information. And if you can't offer that, you're obsolete.
Perfect. As we're nearing the end, maybe I'll allow all the panelists maybe to kind of give a couple of last thoughts on savings and technology and the role of fintech. I'll leave the floor. I mean, PK, do you want to start first, and then we'll leave it as it goes? Yeah.
Sure. So I think my thought on the role which fintech can play in the saving part of it is twofold. One is, how do you create, the infrastructure is there, the regulations are there where, you can consume the data. How can you bring in the awareness to the customer in terms of their behavior with respect to dealing with the finances. And secondly, obviously in the context of robo advisory, how can you leverage that information, which, an open banking platform provides, to offer meaningful and personalized saving options to the customer, right? So in terms of maybe, as you were talking about, there is an age group which is looking at as more secure pension, kind of saving options. There is an age group which is looking at more, risk-prone investment options. So how do you leverage this data, which is available now as an open data, to offer that solution? And I'm sure building that culture in people to know that, they need to make their money work for them and not work for the money, right?
Yeah, absolutely. Gabriel?
Yes. So there's a lot of work and innovation that's going on in the fintech space, and it's all actually very exciting, because not only is it there's the ability to really shift how banks and financial institutions, any interaction with customers and people has changed quite significantly from 10 or 20 years ago. But at the same time, I think if you combine it with the dynamics of the MENA region, it has a lot of potential, especially when you look at the demographics. So in MENA, a very, very young population, region with some of the highest birth rates in the world. There's all these very positive tailwinds to see the adoption of new technology or new ideas, and how we can interact with finance or personal finance and savings, and also more importantly, how we can leverage technology in a way that just improves our lives and savings and retirement outcomes for many households.
Thank you. Mehdi?
Yeah, so my message to the households of the Middle East is to tell them, you are not forced to make the choice between an asset manager who will basically take your money and put it into a black box for which you don't have access at the time that you want, for which you don't know how much you are charged, and just need to wait the end of the month or the end of the quarter to receive it by mail. You don't need to do that. You don't need neither to go and jump into the brokers who offer you hyper leverages or who allow you to access with zero brokerage, and you end up making bets and be taking the rights of your emotions. There is a third solution, which is the robot managers, which is the robo advisors, who are here in order to care for you. They were built in order to put the customer at the center of their ecosystem. We are here to serve you best by offering you real-time solutions, full transparency, hyper-personalization. And what you need to do today is simply try this new way of investing and open your account.
Thank you. Last but not least, Alex?
Yeah, thank you very much, Yasmeen. Yeah, so I would say we're only at the beginning, right? So if we compare it to like a self-driving car, we're not even there at the self-driving car when it comes to like savings and investments and that kind of thing. But that's where we're heading. If it comes to like your full financial well-being and being an integrated part of your life. So there's a lot of exciting things to come. And if you see what's already happening in Europe and also in the US, trading is free. The cost for a wealth management account is everybody can open a wealth management account. The cost has come down tremendously. Much more people, especially in the Netherlands, are investing right now. So that it used to be just 23%, I think, of the younger generations. That's skyrocketing. That's also with the excesses with bitcoins, that kind of stuff. So it's expanding quite hefty now. So if you compare that, because I've talked a lot with Ibrahim about this, and we always talked about also what's happening in the MENA region, about people having where also these changes where in the past, like the government took care of us, and now we also have to take care of ourselves. We have this responsibility for ourselves. So I think these two momentums are coming together. That makes a very, very exciting time in the MENA region, and for customers there to look for beautiful solutions which are created by my colleagues here. And so it's a very exciting time.
Great. Well, thank you, everybody. And thank you, Mehdi, Alexander, Gabriel, and PK for joining us today here. And I would also, obviously, this is the end of our session, but also the end of the sessions in terms of the Arab Householding Savings Conference. I think we've had a very exciting 2 days of very interesting sessions, very interesting insights from all the panelists. And I would like to thank everybody, but especially I think Ibrahim for arranging and putting all of this together. And I personally believe that there's going to be a lot of back and forth between all the panelists amongst themselves. I am on this panel specifically. I'm seeing obviously some collaborative opportunities, some interesting insights in terms of how robo-advisory relates to open banking. So I really look forward to those, seeing the fruits of those conversations. So again, thank you everybody, and thank you all for the attendees and the audience as well. Everybody have a good day, and I guess let's keep in touch. Bye bye.
Thank you. Bye.
Bye, Yasmeen. Bye bye, everybody.